welcome to the meeting. We've got a great audience with us live and in person. We also have some folks live online. So thank you all for making the trip up here to meet with us in person. Excited to be able to share with you what we've learned over these almost 2 decades of investing in real estate here in Texas. I'm Shenoah. I'm the founder of Texas REIAs, and I'm going to be taking you through the presentation today, or at least part of it. And today we're going to talk about the market update, what's been changing over the last several months, and what we can expect over the next several months. We've got a little bit of uncertainty and a little bit of some major changes, I would say, going on right now. And we're going to help you guys navigate through that. What's different about these changes that we're seeing is it's coming at a faster pace than some of the other market updates or other market changes that we've seen historically. So that's one of the things that makes it both a little bit scary and a little bit challenging for us as real estate professionals. And I think we're kind of in an interesting point, and I think we're going to be here for a little while as real estate investors. Realtors are experiencing a lot of what we are experiencing as well too. Just a few months ago, every house that was put on the market was sold above list price, multiple offers the same day, and in some cases even sight unseen. Today, if you don't have an offer in 24 hours, you think, is something wrong with my house, right? And historically, a normal market, houses are on the market for 45 to 60 days, not a matter of hours. But we got kind of used to that rhythm as real estate investors, realtors and brokers as well as sellers and buyers, that over the last probably 2 months, we've seen a very distinct change as we've started to see interest rates rise, as we've started to see the stock market go down, as we've started to see people feel a little less rich now from the standpoint of maybe their Bitcoin or their stock market investments. But what's the one asset class that's held up really well?
Oil and gas.
Someone said oil and gas. We are in Houston, Texas, are we not? What else? It might be the meeting that you came here to see tonight. How about real estate? Now, real estate has not held up as well as oil and gas, but still, you can't live in your oil and gas, or you wouldn't want to, right? But real estate has held up incredibly well and continues to do well, even when the stock market is not, even when Bitcoin is not, even when several other U.S. Treasuries and bonds are not. So a lot of people are hurting right now because of what's happening in the market, and that is all because the Fed wants to beat inflation at any cost, and that cost might mean pushing us into a recession. That cost might mean creating a housing downturn, but apparently inflation is a bigger evil than slowing down the economy and going into a recession, which I find very interesting. But I think that's where we are right now, and that's something that we have to deal with and sort of get used to. The thing about interest rates is, as they start to adjust, do people react quickly to that? Usually they do, right? So you normally see in an interest rate increasing environment the same number of sales year over year right after interest rates rise. And the reason why that is because people who are closing in the month that interest rates rise, they locked in their rate a full 30 to 45 days earlier, so they are safe. But after that is when you start to see a slowdown in the amount of volume, a slowdown in the amount of sales. And we are most certainly seeing that right now. In fact, some of the major markets around Texas saw even a 20% reduction in the number of sales, but at the same time, because we have such little inventory, saw a 10 to 15% increase in the average price and the median price. So we will still see big increases in average prices and median prices until the inventory gets caught up. And the inventory is getting caught up very quickly because the brakes have been put very strongly on housing purchases over the last several months, as people are not liking these interest rate changes. And not liking it, it's all psychological. So what this looks like is someone says, well, I don't like the fact that interest rates have gone up so substantially, so therefore I am out. It's kind of like, I'm taking my toys and I'm going away. My toys being my money to buy a house, right? And then at some point, what happens in the psychology? At some point, what happens in the psychology? What happens? You feel like you miss out? Okay. What else? What happens? What happens in a buyer psychology? Regret. Okay. At some point, does a buyer say to themselves, holy crap, they're going to keep raising interest rates. So now what should I do if they're going to keep raising interest rates? I should buy that house while interest rates are still at this point, because effective in another week or two, they're going to go up another point, right? Which means I'm going to be able to afford even less. So that takes a little bit of time, that takes a little of adjustment in terms of getting used to, and I think we are in the middle of that. So we're having some of the, in March of 2020, we had some of the biggest changes we'd ever seen in our lives in terms of unemployment, right? And right following that, we had some of the lowest interest rates that we had ever had. So we are kind of being whiplashed in some of this, and because we've seen some of the highest inflation that we've ever had for some of us since we've been alive, right? Now we're whiplashing on that when it comes to the interest rates. So I will tell you, it is a different and changing environment, but I will tell you that in 6 months, when people are used to these higher interest rates, right? What are you going to start seeing buyers doing? They're going to be saying, let's get in there and buy something before interest rates go up again. And this, you guys are also young looking in here, which I love. But if there's anyone in here who bought a house in the 80s, and literally I have had people tell me, when I bought a house in the 80s, I was rushing to be able to get that loan because I knew they were about to go from 17% interest to 18% interest. So we had to hurry up and close. Can you even imagine that mindset? Can you even imagine this? That's the thing. It happened so long ago, over 40 years ago, none of us can imagine that. But that's the psychology that starts to catch up after you start to see these higher interest rates going on for a while. So it's going to be an interesting time in history for both interest rates, for inflation, for the economy, and for the housing market. Here's what I will tell you, though. They are taking such immediate and fast action. I mean, I say that. I mean, for up until about probably about 4 months ago, they said this inflation thing is, oh, this is just some transitory thing, right? And then it turned out it's not. So now they're taking much more immediate action to be able to, or I'm sorry, not immediate action, because I think they were a little bit slower to react, but I think they're taking much more dramatic action. In terms of the size of the rise of these interest rates. So I think that's going to be something that we are going to see affect us as real estate investors. And if that is coming to affect us as a real estate investor, what does that tell you you guys need to do? What does that tell you you need to do? What should you be doing as a real estate investor when we're in an increasing interest rate environment, when buyers are putting the brakes on buying? Someone says buy more, someone says buy more. What did you say, ma'am?
I was just saying invest in more.
Invest in more. What else? What else? How many of you guys have heard an investor say, well, I was going to lose money on this deal, except for the blank saved me. What's the blank? What's the fill in the blank there? I was going to lose money on this deal, but the blank saved me. It's the market. The market saved you because prices went up enough to account for the mistake that you made on the purchase. Do you guys follow that? Or the mistake that you made on the renovation, okay? The market saved me. What kind of strategy is that? What's that called? That's called getting lucky. That's called think about it. I was going to lose money, but the market came in and saved me. I got lucky. I got lucky. What's the problem with luck? You can't always depend on it as a strategy. So I will tell you guys this. We are in a changing environment. We're in an environment where you will hear very few investors say, the market saved me. I got lucky. So that puts the onus on you guys investing right now to do what? To be really smart, to be cautious, not to be optimistic, to be cautiously optimistic, to hope that the ARVs, the after repair values that we're seeing in the market today, are still going to be the after repair values, meaning what you will put that property on the market for retail to resell it, they will still be the same 6 months from now, and not expect that they're going to be going up 10% over the course of that 6-month period, which is pretty close to what they've been going up, right? So what does that mean you have to do when you're buying? You have to be cautious. You have to do your due diligence. As real estate investors, we make our money on the buy. If we buy it right, we manage the renovation, we manage the time frame, we're going to make money. But if we overpay for it on the buy, and if we mess up the renovation, and it takes us longer and we find all these surprises because we didn't have anybody else to put eyes on it to make sure we were doing the right stuff and bidding right at the beginning, the market is not going to save you over the next 6 months. Write that down. The market will not save me. Be cautious, okay? And I'm not trying to scare you away from real estate investing so I can keep it all for myself, but I do want to make sure you guys don't lose money. So you guys all come to the Real Estate Investor Association so you can learn how to invest, you can learn how to make money. I feel like that is my job, and I love doing my job, teaching you guys how to make money. But I will tell you, I feel like my job number one is to make sure you don't lose the principal investment. The way you don't lose the principal investment, especially in a market like what we're in right now, is to bring in an abundance of caution, right? Do not overpay, because every dollar that you overpay is a dollar for dollar off of your profit. And if profits are getting pinched because things are costing more in the renovation, and the items that you put in, the materials as well as the labor, and if the market is starting to flatten out, you guys have to be incredibly cautious. Now's the time to be incredibly cautious. So I didn't mean to start this. That's the end of my motivational talk. I can keep talking. Okay, thank you. But you know what? 3 of you guys said something that I loved when I was talking about the market change. 3 of you guys said you should be buying right now. What do you think about that? You should be buying all the time is what I think about it. So, and listen, any issue, any problem, any amount that you overpay on the buy, how does that get remedied? How does that mistake get remedied? Fixing the sales price, right? So that's the market saving you. How else? How else? How else? If it cash flows. Okay, good, good. So typically we just have to hold on to it long enough for the market to do its thing, right? If you buy at the top of the market and you sell at the bottom, yeah, you're going to be in a fair amount of trouble. But if you can hold on to it, right, through the different market cycles, are you going to be okay? The answer is yes. You just have to hold it long enough so that you can be okay. And what do we have to manage? What do we have to set up in advance to make sure that that is the case? What do we have to do in advance to make sure that's okay? That we're going to be okay? Is there anything we should do with our financing? Do we want to get a short-term loan? No. Why? Because if you need to wait for this to happen, oh, that could be very painful for you, because then you might be selling at the market. Then you may not have the time to wait for that market to adjust. And we all need to wait for that market to be able to adjust, especially when it's changing. And then I will tell you, the more exit strategies that you have with your property, your project, the better. So if you can both, I'm opportunistic. I can buy it and sell it if the market is where I need the market to be. But if the market is not, then I can just buy it and hold it and get cash flow until the market is where I need it to be, and I can sell it and make a lot of money. So just want to make sure you guys know how the market is changing. And our second segment in the market update, we'll take a look at all of the numbers so you can know what's happening with residential retail sales. But also want you to know what's happening with leases. What are you guys seeing happening with leases right now? Anybody try to lease a property recently? What's happening?
Prices are going up.
Prices are going up. right? So you know those love letters that buyers have been writing sellers? You guys know what I'm talking about? This is like, here's a look at my beautiful family. We love to make your home our home. We're gonna, you know when your kids, where you put in the pantry, like here's how tall they were when they were this age and how tall they were when we're gonna keep that there. We love that so much, and all this other stuff that's trying to put them ahead of all the other buyers, right? What kind of letters are they now writing to landlords? Oh, I'm gonna be the best tenant you've ever had. I don't have dogs, I don't have cats, I don't have the other animals that we sometimes have, children. So you're starting to see those now. You're starting to see bidding wars on rental properties. You're starting to see big increases in the total number of rentals. In fact, some markets had a 20% or more increase in the total number of rental for lease listings that were leased this past month. So it's not atypical for us to see a jump back and forth, right? From buying to leasing, from buying to leasing. So that means if you have the ability to hold on to it and you can get that cash flow while you wait until the market to come back up to a level that you want to resell it for, even better. And what's the benefit of keeping a property for at least 1 year? Taxes. Yeah, taxes. You're hoping for appreciation, for sure. But it's if you hold it for at least a year and you sell it, then instead of paying the income tax rate, you're paying the capital gains tax rate. Is that a little bit lower? For some people, it's half, right? So that's a big deal. So that's one of the other benefits that happen in the event that you do end up holding it. So just be eyes wide open as you go into this uncertain and changing marketplace, and know that while real estate held long term is going to give you a big win, you have to be prepared to have those options, right? So you need to get what I call financing for the win. I did the same presentation, I called it Financing for the Win, in March of 2020, because in March of 2020, do we know what the heck was going to be happening to us? No, we didn't, right? And if anybody says that they did, I don't know that they're telling the truth, right? So in March of 2020, I also said financing for the win. Anytime we are in an uncertain market, we need that financing to be in place for us so that we can write out any changes in the market cycle, right? And that's what I want you guys to be thinking about as you are investing now. So one of the big reasons why our prices were allowed to float up over the course of the last several years is because of these incredibly low interest rates, right? Because the monthly payments were still so incredibly low. Now that we've got high prices that we've built up over the course of the last several years, and now that we've got raising interest rates, that again is where you start to see some buyers start to put the brakes on and move over to lease as opposed to buying. But I will tell you, the best time to plant a tree 20 years ago, second best time to plant a tree, it would be today, right? So don't let a changing environment stop you. There will be a lot of opportunities, just like there were in March of 2020, just like there was in 2008, 2009, 2010, 2011 to buy and hold on to some of these properties. And I'm curious, how many of you guys in here bought a property in that time frame, before 2015? How many of you guys bought it? Yeah, it was probably one of the best investments that you made, right? Because you probably watched that property over the last 7 years, as an example, double in value, right? And that's what we've seen for many of the rental properties that we currently own, that we started investing in and holding and keeping once we got started as real estate investors back in 2003. So if you guys are wanting to keep up with what's happening in the market, you guys are all at the right place. And I'm super curious, is anybody in here working on a deal right now? Anybody working on a deal right now? One person, two people. Would either of you be open to telling us about the deal and seeing if we could help push that through? Are you struggling with it at all, or are you all good on yours?
Well, the deal that I'm working on is...
I've got a microphone up here. You look really good in front of it. Yeah.
Sorry about that.
Yeah, no. There's no apologies. What's your name?
Jerry.
Jerry. Hey, Jerry. Tell me
Hi.
what you're working on.
Well, the deal that I'm working on is it's an older couple. What can I say? Other than the property is valued, or the ARV right now is $292, and and we can get it for 180.
Okay,
Needs probably about 50
50 in repairs.
repairs.
Okay.
Yes, so
What should he offer? What should he offer? Yeah, what is that? What, you said 130? So 300,000, I'm just gonna round up just to do quick math here. 300,000 times 70% is 210. You said it needs 50 in repairs, right? So I
Yes.
come up with 160. Am I doing my math right? Okay, good. But you are, but she's like, I wanna get it for 130 anyway. So 160 and you have it for 180. Okay,
Right.
that's over $20,000 overpaying. What do you guys think about that? What did I just tell you?
don't overpay.
Yes. So here's the other, and I kind of see as an interesting side of the coin that all of you guys need to be aware of. Sellers, write this down. Sellers are always 6 months behind. Sellers are always 6 months behind, right? Because they're just looking to say, well, my neighbor across the street, she just sold her house for, $290. So if that's seller logic, right? But you got to know that you're buying it on today and where the values are going to be going in the future.
The ARV is 292, but the 3 comps around it were 324.
Okay. So now we got to do different math. So 320 times 70% is 140 plus 14 is 354 minus 50 in repairs, that's 304. Am I doing my math right? Somebody help me out here.
That's close. Can you probably calculate it?
Yeah. So 320 times 70% is 157, right?
157.
Yeah, 157. And then 157, you said it needed 50,000 in repairs?
Yes.
And you've got it 183.
Yeah, 180.
180. Are we liking his deal now? Yes, much better now. Okay, good. Okay, I like your deal much better now. So now that you like your deal, what do you do? What do you do when you like your deal? What do you ask for? What do you want to ask for? Say it louder. Fast close. What else? A better price? Okay. She'll take it for 130. What else? You absolutely want it under contract, but what do you want to ask for when you get it under contract? Will we like terms?
Terms.
Yeah. What are you paying hard money lenders these days? 15%?
15,
4
16,
points?
4 points,
Yeah. Does she have a loan on it?
She does not have one. It's totally paid.
Wonderful. She doesn't have a loan on it. She's older. What does that tell you about her? She needs probably an annuity. An annuity that's safer than what she's getting on treasuries and bonds in the stock market, which how's that working out for you these days?
Not good.
Not good. Not good. Even if you gave her half of what you gave a hard money lender, would she be thrilled beyond belief?
Very thrilled.
Would you be thrilled beyond belief?
Yeah, because you just helped her.
Yes. Yeah, absolutely. And then if you hold it as a rental property, then she could be getting that interest for maybe several years. Now, if you bought it to buy, fix, and flip, she'd probably still be pretty darn happy, right? But is that a way for you to save a little bit of money on your holding cost?
It is.
Yeah. So I would definitely ask her, what are you gonna? I mean, if she's, and you said she's older, which you got to be careful. Like as I'm getting older, I'm like, you better watch what you say, like in terms of like,
Let
it's
me
like
be finite with that. No, she's in her upper 70s, close to 80.
upper 70s, close to 80.
Yes.
Okay. I don't see anybody in this room that you're offending, possibly. So you can go. You can proceed.
I'm safe.
You're safe. So what do we tell people when they're close to retirement in terms of their investment portfolio? We tell them get out of the stock market.
Stock market.
Why? Because they can't handle the short-term volatility.
Too volatile, yes.
It's too volatile. And have we seen that happen with, some of the indexes down somewhere between 20 and 30% over the course of the last over the last 6 months.
6 months.
Yeah, we dropped 20% into a bear market just a few months ago,
Just a few
right?
months ago.
So the last thing she's going to want to do is to be able to put that into. Actually, it's probably a decent time to buy in the stock market right now, but you don't know if it's going to contract more. There's risk there. But how about if you give her a risk-free first position lien on that property that you are buying from her? That's a beautiful deal for her. And you have to kind of explain to her how that can help her. Now, what's the one issue that might stop her from saying yes to that?
She owes money on the house.
No, she owes no money on the house. She needs cash for what? Did we ask her where she's going next?
She is headed to Florida.
She's headed to Florida. I love this now. Okay, let me tell you why. Because if she's headed to a nursing home named Florida, what does that nursing home want? Money. How much of the money? That would be all of it. Yes, you guys have dealt with this before. I can see that. So if that was the case, then having that note, the nursing home would look on that as being an asset, right? But if she's going to Florida, that could be a different story. Is she planning on renting or is she planning on buying?
No, she's already has the place that she's looking at.
She already has it under contract. She already has it purchased.
No, just looking right now.
Just looking. Okay.
She just needs a push, if you will,
a push
to go ahead and put her name on the contract.
Okay.
And so we've actually been working with her for a couple of weeks and just going talking. We've had coffee with her.
Okay,
just
good.
Trying to get a dialogue and making sure we have a relationship with her.
Okay, beautiful. Did you guys hear that? Coffee. So I'll tell you, one of my girlfriends, Nancy, I was listening to her talk to a seller, and she was with me, and we were working on another project together. And she told the seller, "Listen, I'm going to take care of you. How about tomorrow we meet at the Starbucks? We'll get coffee. We'll get some, $5 enormous Bezier face muffins, and we'll." She didn't say that part. And we'll work it all out. And I'm like, are you kidding me? Now, like, you've upped it, so now I have to take my sellers to Starbucks and buy, overpriced coffee and overpriced muffins? Like, that's what we're doing now? And she's like, yes. So you guys hear that? Is the relationship important? Is someone going to sell it to him over somebody else because he took her to coffee? Yes. What's that called? What law is that called? That would be called the law of reciprocity. Does it work? Yes. Now, you also have to make sure that you maintain that relationship. So,
Yes, you do.
so you've heard the saying, "I don't see no ring on this finger." Okay,
Right.
yeah. So you have to continue to buy the coffee. Continue to buy the coffee. Don't give up on the coffee. You have to
No.
continue to build that relationship. And I will tell you, Jerry, you said you do not have it under contract yet.
Not yet.
What do we think about this? You need to put it under contract yesterday. Now is good. In fact, I very rarely tell people to leave my meeting. But Jerry, you need to go right now, man. Yeah. Am I serious? I'm dead serious.
No, I know.
Because she's talking to other people. Yes. And in fact, if you don't get out of the parking lot, some of these other people are in here are going to take it from you, in fact, right? Just because that coffee has the law of reciprocity, wears off. So what's her hesitation? What's your hesitation?
Being too pushy. This, let me just,
Okay.
she's a lady she does have other people, but they don't have the relationship that
Okay.
her and I have.
Okay, so what are you going to do with those other people? What are you going to
Well,
tell her
I'm
about
gonna-
those other people?
Like you said about the contract, I'm going to bring it up this week. Today is Tuesday.
Now is
so
good,
when,
yeah.
when
Now is good.
tomorrow, when I go and visit her,
Yes, tomorrow's
that's
good.
when we're going to present the contract to
Okay,
her
okay.
and get the
And what's going to happen? What are you going to say when she says, "Well, I really want to talk to these other people"? What are you going to say then? What is he going to say? What's your advice? What's exactly what to say for the real estate investor? What is it exactly that you're looking for in the perfect offer?
What's it? Thank you.
Please write that down. You don't have pen, paper, but
Yes.
what is it exactly you're looking for in that offer? Because why not solve the, now is good to solve the problem, right? So yes, go and solve that problem right now. And then what do we want to do about talk about the other investors in case she says, well, I want to talk to these other people. We already said, like, you know, what are you looking for in the perfect offer? And then after she tells you, you say, because you said bop, bop, and bop, here's how my offer is going to solve all of that.
Exactly.
Okay? So, but what do we want to do about the other investors if she pushes, like, I got to talk to these other people?
Let's get it signed today. Let's get the offer signed today so you can get to Florida.
FUD. F-U-D. Fear, uncertainty, and doubt. Okay? What do you want to tell them about these other investors? They're going to jipper. So they're probably going to give you a lowball offer. They're certainly not going to buy you coffee. Yeah? They probably are going to put something like $10 option and $10 earnest. They're probably going to ask you for a ridiculously long option period. Right? They're probably going to put all this scribble into special provisions. You don't even know what it's going to mean. But basically what it's going to mean is that they're going to try and renegotiate with you right at the finish line, right after you're packed up and ready to move to Florida. Is that really somebody that you want to do business with?
No, and she already knows that she's, and I already put in the conversation that we will help her get moved to Florida.
Yes. Oh, I love that. So you guys, there's not just coffee, there's moving boxes in this relationship. Yeah, that's a big deal. So
Because her family, she doesn't have family.
give her a late checkout. Let me give you a late checkout. Do you know what that is? You know, let me close on it and let me let you stay there and you can move out at your leisure over the course of the next month. Is that going to now sound better to her?
That is.
Yes. And then how else do you want to FUD her? Have you been watching this market? Interest rates are going crazy. In fact, they're about to go up another point. The market's about to head down. Now is the time to sell. Transfer all the risk to somebody else. Don't have to worry about all the fluctuations in the market. Because I'm getting a little nervous over here. Does that give you some help in terms of what to do next?
Most definitely.
Okay, good.
Thank you.
Will you guys please give Jerry a round of applause for coming up here and chatting? Awesome. So thank you for that. And guys, we're about to wrap up this part of this segment. So for those of you guys who are joining us online, you can grab us in a couple minutes. We're going to do tribal knowledge as well as the market update as part of the next segment. So thank you all for joining us. You can come and see us live at texasreas.com/live. Love to have you here.